Hello everyone, welcome back. I got some really good ones for you today. But first, I hope you've been having an awesome Labor Day weekend, had a chance to hang out with friends and family, relax, reflect, maybe get ahead for next week. All good things. With that being said, markets are closed today for Labor Day. However, I was thinking we could take advantage of this lull in market activity and go down to the bottom of the gold and silver rabbit hole. I think I can take you pretty far down. We're not going to go to the bottom because there is no bottom. The further down the gold and silver rabbit hole you go, the further down it goes. If you didn't know gold and silver was a rabbit hole, well, it totally is. And maybe by the end of this video, you'll walk away with a bit of a different perspective. I think if I package everything correctly, you'll walk away from this video with a better understanding of gold and silver than, say, 99% of people out there. And we'll even go beyond what I think bankers would allow you to go. And so there's a little bit of weirdness there, a little bit of vested interest by the banking system, the beast system, the debt-based monetary system, to keep people off balance and confused when it comes to the precious metal space. Reason for that: the dollar empire needs you transacting in dollars, and they want you in their currency, and they do not want you to hold sound money. So gold, silver, Bitcoin, they don't want you in these things. They want you in their dollar system, their fiat system. So, if you ask a banker about gold and silver, there's a good chance that they're just going to crap all over it. And that's because gold and silver are non-productive clumps of atoms that they compete against with their 40, 50-hour work week and regularly lose against for really good reasons. So the banks don't want to see non-productive clumps of atoms that are the base layer, the tier 1 layer for the entire banking system. They don't want you to understand how the role that gold and silver plays in all this madness in the rigged casino, and so they really just tell you to avoid. But they also have pretty good reasons, because mining stocks are generally pretty crappy investments. But that's a different video for a different day. We're gonna focus on gold, silver, what it is, its place in the monetary system, and kind of try to get around some of the psyops and go further down the rabbit hole than maybe you've ever gone in one video before. So let's dive right in. Okay, if I gave you a 1 ounce gold coin right now, let's say a 1 ounce Canadian maple, you could go to a bullion dealer or a coin shop tomorrow and sell it for $1,700. There was a time 60, 70 years ago when you could have gone to the bank with this 1 ounce gold coin and left with 35 US dollars, because it was pegged. Gold, the dollar were pegged to each other before 1971, meaning $35, 1 ounce of gold, same thing. As soon as Nixon temporarily suspended the dollar's convertibility to gold in 1971, fast forward to today, gold has gone from $35 an ounce to $1,700. And you might be thinking, like, dang, that's a heck of a gravy train. I would have loved to ride that. But to be honest, if you had 10 ounces of gold in 1970 and you had 10 ounces of gold today, you are no richer at all. Your wealth has not changed. Sure, you could go sell, those ounces of gold and get 1,700 US dollars per ounce, but the value judgment has never changed. In 1970, $35 could have got you a nice suit. Today, $35 gets you a quarter of a tank of gas, maybe Subway for 2 people. But the $1,700 today still gets you the nice suit, or still gets you a bolt-action rifle. Gold shares a historic relationship and ratios with all other commodities. Civilization chose gold thousands of years ago to be money and a store of value and a medium of exchange. And they've challenged this time and time again. But gold always withstands the test of time and remains the yardstick, the unit of account. In a debt-based monetary system like we have today, that's all denominated in fiat government issued dollars. Well, gold is now the anti-debt unit with no counterparty. So a 1 ounce gold coin thousands of years ago got you in ancient Rome a tunic, belt, and sandals. Today gets you a nice suit. 1 ounce of silver, about a cooked steak. It's the yardstick. So if the economy is like a pool of water, the financial system is like a pool of water, and the water level is high during a really strong economy with strong growth, and we'll say the water level is very low when the economy is slow and you're getting a lot of contraction. Well, when you buy gold, you're buying the measuring stick for the pool. So you can't really get rich off it because it's never going to fill you up, but you can never lose money on it either because it doesn't drain you. It just keeps its value in the face of collapsing government issued currencies. So gold is a bit of the Achilles heel to the fiat global monetary system, because no matter how much banks try to suppress it or hide the fact that it's still money, it reflects in the market price and what market participants are still willing to pay, which ultimately ends up being the same over time. Now, I will say there is metals manipulation, there is silver manipulation and gold. We'll talk about that in a little bit, but let's just stay on the idea that gold is sound money, a unit of account, the base layer for the entire global economy and financial system. It's like the foundation on which everything is built. So it doesn't change, and you don't want it to. If, say, there was a way to begin automating gold coins and like you could just have a machine that pooped out gold coins all day long, well, that would break the foundation, and gold would essentially fall in price because now there's a way to automate mass production of gold coins. However, there's no such thing. 500 years ago, gold was very difficult to go find it and dig out of the ground. Today, very difficult to go find and dig out of the ground. So when you take delivery of a gold and silver coin, you're taking delivery of the stored labor from moving all that dirt and ore, processing it, all that sweat and toil to concentrate all the metal in that ore and then stamp it into a coin. You're taking delivery of the work that is already done, and it's stored. So it's stored labor. You can't store your labor in dollars because of inflation and the money supply always fluctuating. But gold represents X amount of jumping jacks already performed to give you this amount of essentially monetary energy. Civilization grows at about 2% a year. The gold supply inflates at about 2% a year, keeping gold very stable. Now, I will say it's still inflationary, because if I gave you all the gold above ground right now, which would fill about 3 Olympic-sized swimming pools, if I gave you all the gold right now, like in about 50 years, you'd only have like less than half of it, because every year, more gets mined, right? So another thing about gold is whenever gold does go into speculative bubbles and the price really starts moving higher, people might start allocating capital into the mining sector, and all that does is stimulate supply and incentivize people to go out and find more gold and bring more gold to market until the price falls back down to equilibrium. So there is some weird things about gold, but just understand that short of automating its creation or finding an easier way to mine it, or like asteroid mining, the gold is the yardstick. The gold here on Earth always will be. We're not going to get more unless another asteroid hits us. There is no geological process that creates more gold. Gold is only created when a star goes supernova and explodes, or when 2 neutron stars collide. So It's almost like gold is the universe's Bitcoin, and it mines more by having stars explode. Really cool. Um, it takes that amount of energy inputs, basically fusion happening inside a star, to get those helium and hydrogen atoms mashed so many of them so firmly together that it can create a stable element as heavy as gold. That's a really neat process, and the energy expenditure is far beyond what any human could recreate. So you can't fake gold. I mean, there is like fool's gold, but you're an idiot because there are so many different ways to test to make sure that that's real. And let me tell you, when you're holding an ounce of real gold, you just know there's something so weird about it. One other fun fact about gold is the electrons are going over half the speed of light, and that's where it gets its gold color. Otherwise, gold would be silverish or platinum colored. But it's gold because its electrons are going over half the speed of light, so you are witnessing the theory of relativity like right in your face. Pretty cool. So, gold, it's sound money, okay? It's portable, fungible, divisible, scarce, useful, indestructible. It ultimately got chosen by man to be money, and it's really hard to get away from that when all the alternatives are, for instance, like salt. Salt is not indestructible. If you were to get it wet, it would just melt. Gold, you can't destroy it, okay? You can't. So, gold is better than salt. Everything you could try, seashells, birds' feathers, gold always rose to the top because, you can't just barter, because if I grow blueberries and you do cattle, well, I'll be out of season sometimes, and sometimes you'll want blueberries and I won't be able to get them for you. And so, bartering creates this weird situation where people really can't get their needs met, and it's just not very efficient. But if X amount of gold was worth X amount of heads of cattle, just like X amount of gold was worth X amount of baskets of blueberries, well, we can now use gold as the medium of exchange. So gold is money, and it is sound money. So is silver, so is platinum, so is Bitcoin. These are not currencies. When the bank tells you that these dollars are money, and when they get you to say, I need money, or how much money are you making, or, I need money to pay bills, you're using the word totally incorrectly. If you want to use the terms correctly, that's currency. And currency compared to money is apples to oranges. Currency is not even supposed to be a store of value. By design, it's inflated and used merely as a means to an end. Gold is money because it is portable, fungible, divisible, scarce, useful, tangible, indestructible, a store of value, scarce. So gold is money. But now that we've established that gold is money, and dollars or yuan or peso or rupee or yen are just currency, is gold an investment? Like if you buy gold tomorrow, did you quote unquote invest in gold? No, because it's not an investment. And that's a good thing. You don't want your gold to have counterparty, return on investment, pay a dividend. You don't want that. You want your gold to be the money. And when investors feel like counterparties, so like other humans with business ideas and cash flow and dividends and return on investment, when they're not looking so hot, you can go reach for actual just sound money, and you can essentially store really nice suits, because 1 ounce of gold is a nice suit, always has, always will be. Or you can stack cooked steaks, which would be like buying a bunch of silver coins. So when you think that the players at the table and the banking sphere is going to really suck at bringing you a profit, and you think that there's just too much risk in other people right now, given the backdrop of a weak economy, well, then you might reach just for sound money. And that's a much better alternative than staying in cash or the currency, because as we've established, currency is not money. Currency is just currency. So you stay in the currency, and whenever the economy slows down, the central bank weakens the currency, you get beat up pretty good sitting in that cash. But if you're in gold, real money, you can wake up every morning knowing that you didn't become any wealthier, but you didn't become any poorer. You bought the yardstick against which everything else fluctuates. So if you buy a 1 ounce gold coin tomorrow and it goes up $50 by the close, you became $50 richer, sure, in nominal terms, but all that happened was the dollar got weaker. You in gold are just quote unquote as good as gold. You're holding at the flat line. You're buying the yardstick. So when you think relative to how investments are going to behave, gold might be smarter because you think the investments are going to really, poop the bed. Well, gold can end up outperforming them. And obviously we've talked about how, we've kind of proven how gold outperforms those currencies. So that's kind of gold's, place in all this. It's the money. JP Morgan once said, gold and silver is money, everything else is credit. Just something to think about. So gold is not an investment because you're not inviting counterparty in your life to do jumping jacks in the hopes they end up doing providing even more value or finding a way to do jumping jacks even better and making you rich. No, when you buy gold, you're buying jumping jacks that are already done. You're buying the Mona Lisa. You're buying something that is already done. The work is done and stored. But that is a good thing because you cannot store your value in currency. So money is the way to go. Banks do not want you to call gold and silver money and dollars currency. They don't want you to be able to understand the difference. They want you in the fiat network, and they want you paying taxes in the fiat network, and they want you transacting, because the dollar gets a lot of its value from that artificial demand from taxes being required to be paid in US dollars. The monopoly on the use of physical force, the petrodollar, the intellectual property that our country has, the land that our country has, all that goes back to supporting the dollar empire. So the banks and the banking system want you in that. They have a vested interest in keeping you in that, and they do not want you taking your currency and exchanging it for money. So they tell you it's not money, it's just a stupid commodity. But if it was just a stupid commodity, then going off of the gold standard in 1971 wouldn't have been the best thing in the world for gold's price, and it totally has been. So next time somebody tells you gold's not money, we're not on a gold standard, tell them, first of all, not being on a gold standard has been the best thing for gold's price, nominally speaking, so I guess we are. I guess we still are on a gold standard. Crazy. Silver, smaller market, okay? So gold is about a $12 trillion market cap. Silver's only like 1 or 2. So silver is a tiny market. It's kind of leveraged. Every 1% move up in gold is a 1% move up in silver, or 3% move up in silver. So gold and silver have about trade on about 3-to-1 leverage. So a little bit more volatile, but silver is stable, okay? Gold and silver are money. Bitcoin too. That's kind of a different video for a different day. Everything else is credit. So gold and silver are money. Everything else is credit. So when you buy silver coins, you're not speculating. You're doing the antithesis of speculating. You're storing value. It is $18 an ounce right now, and you might be thinking, that's pretty cheap. That's like poor man's gold. I'm going to go buy some of that. Why is it so cheap? And historically, it is cheap because if we go back thousands of years, historically, the gold and silver ratio has been closer to 15 to 1 or 12 to 1. So, go back 1,500 years, 15 ounces of silver was equal to 1 ounce of gold, or about 12 ounces of silver was equal to 1 ounce of gold, kind of around in there. Today, that ratio is closer to like 70 or 75. So now it's like 75 ounces of silver equals an ounce of gold. That, historically kind of lends itself to the idea that it might be undervalued. Take the gold price today, so like $1,700, divide that by, we'll be generous, 20, and that I think would be the fair value of silver right now, probably around $80. And a cooked steak is, around $80, right? Right now, a nice one, cooked steaks, how about 35, okay? And that just so happens to be what the bullion dealers are selling for an ounce of silver. So silver is 18 an ounce spot price right now, but the dealers are only gonna sell to you for about 30, 36. And then we've also just kind of uncovered maybe its fair value is closer to 80. So I think silver should be in the 35 an ounce to 85 an ounce range right now, but it's down there in the dumpster as far as spot price at 18. Why? Well, it's suppressed. Google silver price manipulation, JP Morgan, hit enter. Google silver price manipulation, Credit Suisse, hit enter. Google silver price manipulation, gold price manipulation, Credit Suisse, hit enter. Google gold price manipulation, Deutsche Bank, hit enter. It's right out in the open, okay? And we've already discussed how the banking system, which feeds and supports the dollar empire, does not want you in these non-productive clumps of atoms that they compete against and often lose against, even in spite their 60-hour work week. They lose against non-productive clumps of atoms sitting in your sock drawer. So they hate that stuff. They want it suppressed. They want the dollar empire to be strong. They don't want gold and silver to be going up a lot every year, because that is a canary in the coal mine that the currency's collapsing even faster. So they try to keep a lid on it by shorting paper silver that doesn't exist, spoofing the market with massive sell orders only to cancel that orders, but it's too late. Everybody's already started selling into the market. So the banks have a very vested interest in keeping gold and silver prices under their control and manipulated. And ideally, they don't want them going up and drawing interest. They want them falling, going down, suppressed, nobody paying attention to them. They want everybody calling their currency money and just ignoring gold and silver. And that helps keep their empire and their counterparties alive and well, and what they're trying to accomplish with their debt-based monetary system. So crazy stuff. I will say it might be okay to stack this stuff, make it a one-way street, so you always acquire physical, you're always stacking every month or 6 months or whenever you can, and it's just a one-way street, okay? And you just stack physical. I would stay away from the derivatives, because even if somebody has a high-grade gold deposit, that doesn't mean they have good CEOs and management. And even if they have those things, the mine probably doesn't have a good mine engineer. And even if they have all that, they probably don't have good geologists, or they lack infrastructure to get the ore processed cheaply, or they're in an unstable jurisdiction where there's like civil war and problems all the time. And as we've discussed, the banking system doesn't even want these gold mines to do well. They don't want to give gold and silver mining companies a loan. And you can kind of see why. They hoard this stuff, but they don't want you in it, and they don't want to stimulate supply, and they don't want the mining sector to get its nut, because if the mining sector is doing really well, that's a poor reflection on the financial system. So that's a ton of reasons right there why mining stocks suck, and I don't like to quote unquote invest in gold and silver, and never will. I won't even buy like the iShares SLV that like tracks the spot price. I won't do that, because when I buy my gold and silver, I'm escaping counterparties, I'm escaping derivatives, I'm leaving the casino floor altogether, and I'm buying the yardstick against which this rigged casino plays its game. So gold is unchanging. It's as good as gold. Make stacking every month in physical a one-way street. It is money. It is a store of value. It is low maintenance, which is amazing. If you were to put your money into other real assets like, say, real estate, there's maintenance costs associated with that, you know, but things like gold, they just sit there. Now, you will have to pay to store it if you buy too much, so be careful. You can make gold a negative yielding asset, and that would suck. It's like if you're trying to escape real negative interest rates in your bank account by going to gold, and then you end up paying a negative rate protecting your gold. Like, you know, what are you doing? So be careful with it. But gold is gold is money, and it is a asset that is going to compete with currencies, compete with equities, and it's going to be a safe haven, unchanging store of value. It's liquid, it's there for you when you need it, and just a wonderful way to store labor over the long run, kind of like how we've discussed how the mining works. So the silver price and the gold price are manipulated. The banks don't want you in it. They're going to give you every reason not to be in it. I certainly hate the idea of investing in mining stocks. So there's some things, I'll agree with the banks on. But generally speaking, stackers never lose. Stack the physical stuff for the long term. Don't sell it. And that's a wonderful way to like supercharge your like savings account, basically. So I like gold, I like silver, I like platinum, I like Bitcoin because I like sound money. I don't like currencies. And I do like equities and counterparties and innovating and changing the world and making things easier for people and taking over the world with really good ideas. But hey, that's for investments, okay? That's for your Apple stock, that's for your Microsoft stock. And those are investments, those are counterparties, those are companies that are trying to change the game and take over the world. Gold is not. You don't want it to be. It's just a monetary network that is very scarce. And when you turn your fiat issued government trash dollars that are going to lose tons and tons of value, or peso, won, it doesn't matter, ruble, yen, you turn those into gold and you notice the price going up. If you're not really thinking about it, you're going, oh, I'm making money. But you're not, because you still have the same amount of money. You're just making more currency in nominal terms because that currency's got some serious issues. So gold's the yardstick, unchanging. Even when you get off the gold standard, gold doesn't care. An ounce of gold is an ounce of gold, just like a head of cattle is a head of cattle, or a basket of blueberries is a basket of blueberries. You want it that way. It's money. It's a wonderful asset class. It is not an investment, and it is not a currency. So portable, fungible, tangible, divisible, useful, scarce, indestructible, store of value. That's what it is. I like this stuff. I'll buy the stuff. I won't buy the mining companies though, because I don't want them to have my money now, or currency. See? I mix those up. I don't want to give mining companies my currency so they go out and they bring more gold into the monetary network. I don't want that. I want no new gold coming into the monetary network. I have all the gold and people want the gold. So I don't like the mining stocks. I gave you a lot of reasons why they're kind of garbage. But I do like gold. I do like silver. I do believe in stacking for the long term. Stacking and trading are completely different games. Investing and stacking are completely different games. So just know that. And if you want to buy the yardstick, especially because you think equities are going to underperform and you don't want to sit in currency, well, those are two good reasons to head over to gold. And if not, that's fine too. It's not going to get you rich, not going to make you poor. It's gold, as good as gold. Hope that kind of clears it up for you. Like, comment, subscribe, share, whatever. Let me know what your thoughts are on gold and silver. I'm not a hater, okay? If you want to go down the silver rabbit hole, check out Bix Weir, Road to Ruta. You know, silver has a lot of Kool-Aid drinkers, right? There's a lot of people with $600 price targets on silver, $300 an ounce silver, $600 an ounce silver, crazy stuff. And we're down there in the dumpster at 18. Could be worth taking a look at, but I drank the Kool-Aid. It was pretty good, but I'm not going to be a gold and silver channel. We're gold maxis. This is the mining stocks you should buy. Like, It's not, that's in my opinion, not the way, but hey, I do love this stuff, and I like both, so do your thing. And I like platinum too, we've talked about that, and Bitcoin. Till next time.